Kitco News special coverage of the Future Blockchain Summit is brought to you by Cook Finance, a revolution in DeFi asset management.
We're here with the Director of Financial Sciences and Digital Assets at IBM, Nitin Gaur. Welcome to the show. It's a pleasure to have you on Kitco.
Thank you so much, David. Good to be here.
We're continuing our coverage at the Future of Blockchain, a summit, a great summit in Dubai. And the name speaks for itself. It is the future of blockchain. Your job title speaks for itself, the future of blockchain. I was just talking to you offline. IBM has a very long, storied history in computing technology. And the term digital assets really is a relatively new thing when you examine the broad history of IBM. So your job title in itself tells you something about where the company is headed and where it sees the future of computing and digital technology. Tell us about the overview that IBM has when it comes to cryptocurrencies.
Absolutely. So a few things, right? One is you're absolutely right. I think we have been longest serving the financial services industry for the longest time.
Yeah.
We have been the primary technology provider and technology services provider. And it's up to us now to look into 3, 5, 7 years from now as to how the digital asset space changes the framework, changes the landscape of the transactional platforms that we're building. So in my role, it's my job to be able to look into the future of finance, future of trading things of value. And that encompasses not just crypto assets, digital assets, NFTs, and the entire platform that is meant to be able to bring that revolution, bring that change.
Okay.
And so I'm supposed to look at AI, I'm supposed to look at blockchain, I'm supposed to look at some of the various fundamentals of underlying cryptography that powers the entire transaction network, and be able to help and advise our financial services clients as the type of infrastructure they need, the type of technologies they need, the skill set they need to be able to be successful and adapt to this new model.
AI and blockchain are some of the newest developments and trends, the biggest trends in computer technology, and IBM is at the forefront of both of these. We know IBM is a leader in AI technology. We know about IBM's Watson that came out years ago. How are you and the company integrating these two technologies, blockchain and AI?
Oh, that's a brilliant question, and it's something that keeps me and my team sort of busy for a long time.
Yeah.
If you look at blockchain in general, it's a transaction system. It's blockchain, it's a chain of blocks. So every transaction that gets processed, it has a linkage with past transaction. So one thing that's amazing about blockchain is transparent. There's enormous amount of data, and it continually processes the transaction that you throw at it. What we're trying to do with AI is two things: connect the dots, find patterns. And so while blockchain is going towards facilitating a real-time asset movement rails, where there's real-time payments, real-time movement of securities, real-time movements of tokenized assets, there is a need for things like real-time fraud analysis. There is a need for things like real-time analytics, which simply doesn't exist today. Most of our systems are really doing the analysis after the fact. And what we are proposing with our technology design, with our platforms, with the infrastructure is, what will the world look like when we are in a hyper transaction processing environment with real-time transaction processing? What can we do in applying AI to be able to connect the dots, which is an important part, find the patterns, and these patterns could be new business opportunities or financial crimes, to name a few things.
Machine learning has trained computers to beat the chess champions. They've trained computers to operate on its own and create new protocols for other programming languages. What about blockchain? Can an AI create its own crypto asset, currency, whatever you want to call it?
That's a tough question, though.
Let a computer run it by itself. Let it do its thing, and then in a couple of days they'll come up with an ideal blockchain technology. Can they do that?
So two things. There has been projects like GPT-3, for example, that has created personas, created its own blog posts, which is a computer system doing these things. So it's quite conceivable that over time, the advancements in AI should be able to create the infrastructure. And it can also, as a part of the infrastructure, create the economic system that drives the crypto assets, which is the incentive economic system, which drives the emergence of cryptocurrencies. What it cannot do, however, is generate transactions, in the sense that it cannot create fictitious systems to be able to transact, because then you lose the entire value of why we are in the first place, to solve the problem. And so technical constructs, absolutely yes.
Yeah.
But for it to be truly meaningful, it has to appeal to users. It has to appeal to me and you, which can take advantage of it.
There are thousands of crypto assets out there, cryptocurrencies, coins, whatever you like to call it. Some have its flaws, some have its values. There must be a way for a supercomputer to sort of parse through all of these and pick out the coins with the best qualities and just create an optimal coin. Think about Bitcoin, designed to be a peer-to-peer system, arguably has failed in doing that, evolved into a store of value. Why can't it design a Bitcoin with all its pros and none of its cons?
So two things. One is we are doing that. In fact, my team is so that as of yesterday, 12,888 tradable tokens out there. That's a lot of tokens out there. And then you also have thousands of other tokens that haven't really seen the light of day in the mainstream trading mechanisms. And what we're trying to figure out is one, classification of these tokens, because a token is a token is a token, but some token represent a payment token, some of them may represent a stake in the project, some of them may be governance tokens, some of them may be NFTs, so you have all these different classification. So what we are doing, applying again AI and machine learning technologies, is to figure out a mechanism to find the transaction patterns, to find classifications, and help various regulatory agencies around the world, various businesses, to make sense of these things and figure out the quality of these tokens. For example, how long they've been trading, what is the trading volume of these tokens, how long they've been in existence, and so on and so forth.
How long have they been in existence, trading volume? You're naming trading indicators. Yes. If I were a trader or let's say a fund manager, I would come to, I think you know where I'm going with this. I would come to you and say, Nitin, wow, you got a great piece of technology and you're looking at all these different blockchain technologies that are in progress. Can you design a trading algorithm such that it would pick the ideal coins for me to buy today?
So two things, right? I use the word trading because if you look at the fundamental tenets of blockchain as a technology, fundamentals, it does three things: trade, trust, ownership. Any blockchain system in the world is aiming to solve these three fundamental tenets. So you have to have an asset that you're trading between multiple parties, hence the peer-to-peer network. You have to ascertain the sense of ownership, so you know who's trading with who, and then you have to have the fundamental element of exchange of assets. And so in many cases, there's always this question we get, hey, can you have a massive quant algorithm? And there are algorithms out there. There are many trading firms who build these algorithms. But I'll tell you this, I don't think any of them can predict the future. They can give you a certain level of certainty. So I can give you with a certain level of confidence that's 80% chances that Bitcoin is going to go up. But no one has really seen the future, so to speak. And so while these algorithms can predict the pattern based on the past behavior, but there's an adage that we say in financial service industry that the past performance is not an indication of future performance, as you know.
Absolutely.
I would say that adage applies to technology as well.
Yeah, absolutely. Well, we can predict with 100% certainty, but you can't assign a probability. So your work, does it encompass predicting price performance of various cryptocurrencies?
Actually, no. My work is mostly in terms of technology areas, understanding the space, understanding how our largest financial institution, larger clients can consume the technology, consume the evolution, the business sort of models that are emerging, the newer asset class that are emerging. How can they consume them into the risk models of the financial services industry? How can they safekeep these assets with digital asset custody? How can they provide a dashboard and monitoring that's needed for the regulatory and compliance adherence? So my job is to be able to take all this, understand them, have the right technology framework, and provide that as a service to our clients so they can move forward with this.
And in your opinion, which protocols or platforms have, let's say, the most potential for growth right now? I'll give you some examples. People say Ethereum has a lot of potential because a lot of DeFi technologies are built on the Ethereum platform, NFTs, for example. People talk about USDC stable coins as being a platform for a lot of development in the peer-to-peer transaction space. CBDCs potentially that are coming out are based on the stable coin sort of model. What do you think?
So there's a lot to unpack there. So I have worked on close to 19 central bank projects around the world. We work with stable coins. I actually launched a payment network a few years back, which had stablecoin into it. So these are all payment network, payment infrastructure related questions. I would say that in many cases, these different tokens represent a vehicle to create new infrastructure, which enables a lot of exchange between asset classes, and payment, while it enters a space which allows us to take the notion of fungibility and digitize our existing cash and existing systems you have. But there's also the movement of using other tokens which is security tokens, and move them into a space and removing intermediaries, removing the friction that exists. So from protocol perspective, which is the original question that you asked me, I think that, and I've been following Bitcoin from the day one. I've been following sort of Ethereum, and now the newer layer 1 protocol, as we call them, Solana, Cardano, Algorand, to name a few. They all are trying to solve some of the core fundamental challenges of scale, global reach, security that has to be built into the system at a cost that's achievable to me and you. So it doesn't make sense for me to send you $100 and pay $50 for it, which was the case because of lack of scalability and rise in the intrinsic value of these tokens that is meant to pay for these transactions. So I would say that, which I say to all my clients, I say to all my technical teams, and when we enter in this debate of which protocol is better, that we haven't seen anything yet. There's still tip of the iceberg. There's a lot of technical innovation yet to be seen. So I'm not going to declare anybody a winner as yet. I think we still have a good decade to go before these protocols begin to settle down and solidify their position.
I want to switch gears now, talk about regulation, of which you are an expert in. Your favorite topic. Not the favorite topic of many crypto traders and investors. In fact, the word regulation is kind of a big bad word, like a swear word within the crypto trading investment community. Why is that? Why do you think people are so scared of regulation?
So there's a FUD factor to this, right? Fear, uncertainty, and doubt element of it. So let's look at what blockchain has done. So blockchain has brought in a lot of transformation, which was the supply chain and track and trace and provenance, but it's also brought a lot of disruption. So it is a platform for disintermediation. The entire financial services industry, including the normal retail banking, is an intermediary. They're sitting between you and the rest of the other ecosystems. And blockchain technology in general threatens many of the players who are providing that relay of trust as we speak. So in many cases, I believe that regulation is, again, it's evolved over the last 100+ years in this industry to make sure that the consumer is protected, the investor is protected. And while the disruptive forces, which is, it's not hard for four people, knowledgeable technicians, to create a decentralized financing project and offer these amazing sort of, opportunities. And the only fear is that these are individuals and teams who are focused on innovation, who are focused on disruption, and they don't fully either understand or don't have the regulatory apparatus or licensing permission to operate in this space. Yeah. And no one wants to deal with it either, because they want to build a system that's devoid of these things. Whereas the regulated financial service industry have always viewed regulation as a moat, right, which prevents me and you to open a bank. Yeah. And so you have the clash of cultures. And I think that regulation, for all the right intended purposes, because I serve the financial services industry and that sort of thing, I took it upon ourselves to understand the existing regulation, understand how digital assets are impacted by it, and also understand how can banks meaningfully consume and adopt the infrastructure to make them compliant, so to speak. Yeah. Right? So I'll stop at that and see if that makes sense.
I like to understand why there's such a disparity in attitudes towards regulation around the world. We're here in Dubai, for example. Dubai has recently legalized the use of cryptocurrencies in trading and in the payment systems. It's first of its kind in the Middle East. So really setting a precedent for the region. It's not alone. El Salvador has recently done the same, but only a few, I would say, select states and actors around the world are doing this. And then on the other extreme, you've got China basically banning everything. Right? We're not talking about different time periods, right? This is all happening at the same time, and you got completely different attitudes. Why is that?
So I think that's a really exciting question. And I think as I was designing central bank digital currencies, I had to work with different countries. I think every country has an economic imperative. They have an economic objective, and they view technology as one way for them to break free and do something amazing and uplift themselves into the new era, as we've seen. And we have seen that with internet. It took us almost 20 years to see evolution of the internet and what it has done, where we live today. And so I think that from a digital asset perspective, El Salvador is focusing on payments, they're focusing on remittances, which is 400 million flowing in from north of the borders coming in, and 8% of that going to the ecosystem. That 8% could go back into economy, and that's sort of looking at unlocked potential of capital, which has gone through fee structures and so on and so forth. China has different element in terms of what they've done to Chinese yuan, looking into ensuring that they have tighter controls and capital flows. They are building the payment infrastructure and payment instrument they have full control over.
You're very diplomatic. It's a very diplomatic way of saying they want no competition for their digital yuan.
They have, and I've used the term in one of my podcasts that this is the mother of all bans. China has gone through 7 bans in the last, I would say, 10 plus years. And then you have countries like Dubai and Switzerland who have viewed this to say, let's embrace. So I always say, understand, embrace, and adapt. The first step is to understand. Safe harbor is a perfect example. Let the amazing innovators and technology evolve and develop. That's understanding it. Second thing is embracing it, figuring out how it can make its way into financial system, e-commerce system, retail system, payment systems, and then adapt. Suddenly, you have a switch, which gives you a control vehicle to be able to, as opposed to shunning the innovation altogether. Because innovation, like water, finds its path. It'll flow to the jurisdiction, the countries that have the right environment to incubate and give support to these technologies, which is what we're seeing here, I think.
So it sounds to me like, Nitin, you're saying that countries adopt regulations for blockchain and cryptocurrencies based on their own priorities for e-commerce or their own fiscal or monetary policy. So given that, what do you think should be the policy that the United States government should take? What is their attitude towards Bitcoin?
So two things. Bitcoin is one of the many, as you know, and as an American, I take pride in our financial system. I think it's done transparency attracts capital, and US financial system has been sort of the beacon of that transparency in the past. If you attract a lot of capital, it's still the number one place to go for raising capital, for instance. One thing that we, as an American, as an IBMer, and as an individual who lives in the country, that's our exact example to our lawmakers, that oftentimes the regulators will enforce the books and the law. That's their job. So I don't think we should probably understand their perspective too, but it's at the end of the day, it's a we the people problem. We have to educate our regulators, educate our lawmakers to embrace, and I think, Commissioner Pierce did mention about a safe harbor, which I think is a perfect way to allow companies to be able to develop, give them 3 years before we start throwing regulatory books and legal frameworks at them. Giving them an opportunity to build something amazing. Attract capital, attract technology, attract talent, which essentially is the foundation of growth, economic growth of any nation, which is what I think we should do as well.
Let me ask you this a different way. So you've got different people in the United States government with different attitudes. You've got Gary Gensler, who I wouldn't say is a Bitcoin bull or proponent, but he's a little more open-minded than some of his colleagues, let's say, like Janet Yellen, who is openly critical about Bitcoin, Elizabeth Warren as well. So you've got different actors within the US government taking different positions. Do you think the government of the US will ever take the position of the Chinese government, which is to outright ban cryptocurrency trading?
So as an American, I don't think they can do that position, because at the end of the day, we have a fledgling democracy. We have a process in place, which, you cannot really ban technology, because that's essentially banning internet.
Well, the SEC doesn't need democratic approval to ban stuff. They don't need to hold a referendum to...
Correct, but the thing is, what SEC can do, or what many of the regulators can do, is ban instruments and activities.
Sure.
So they can ban to say, if you're doing something illegal, that's true for cash as well.
Yeah.
And that's true for what is, so while we haven't really declared a legal tender, there are n number of things that happen in the US. Loyalty points and miles are a part of way for us to pay for things when you buy from airline products and miles and so on and so forth. So the broad consensus, which is, and US is an interesting place because it's truly, in my opinion, the political framework is truly decentralized, the way the law is made and the way the law is adapted. You have different agencies. You have Security and Exchange Commission that governs the entire securities and the apparatus. You have the Commodities and Exchange, Commodities and CFTC, which is Commodities and Future Commission, which looks into commodities and the broader framework around transaction processing in infrastructures. And then you have FinCEN and Treasury that looks into payments, that looks into payment as what is used for. And so each of these agencies are looking at their swim lanes. So while FinCEN and Treasury is looking at stable coins and the impact, which is financial stability and risks that these stablecoins impose by ensuring that they're collateralized the right way, because these are IOUs essentially.
Sure.
So they've done the right things in many cases. They've looked into the stability of these stablecoins. If they represent a US dollar, they want to make sure that there's some fiduciary responsibility of these entities who are keeping a dollar for dollar in some bank account around the whole thing. And then the SEC is looking at what are securities? Do we need to regulate these things for investor protection? So while the intention is right, I think by painting such a complicated and emerging industry with a broad brush is a mistake. That they have to understand the space, understand the technology potential, and then regulate it accordingly, but also leave open for innovation.
All right, so unlikely they will ban cryptocurrencies.
I don't think so. I don't think they may ban activities behind it. So if you're paying cryptocurrencies for nefarious activities, that's wrongdoing. But I don't think they can technically ban, I don't think China can ban either, because you begin to see the movement of these crypto assets move from traditional crypto to, let's say, NFTs and in-game currencies. So it's very difficult, unless you completely shut down the internet, to control the space. And that's why banning technology is never the answer. It's banning activities, having the right control procedures around it to understand the space, I think.
China recently banned minors from playing video games on weekdays, but that's a different conversation altogether. Thank you so much for coming to the show today.
No, David, pleasure.
Absolute pleasure.
Thanks for having me.
Thank you for coming on the show. Thank you for watching. We'll have more for you from Dubai. Stay tuned.
Kitco News special coverage of the Future Blockchain Summit is brought to you by Cook Finance, a revolution in DeFi asset management.